Ladies and gentlemen, Matthews here from M&L Forex Traders. I hope you're doing alright. Alright, without wasting much of your time, as you can see from our screen right now, today I want to talk about something very important. Okay, I want to talk about something very significant that can actually help you become a better trader. Alright, so in front of me right now is what I call a higher probability a QML setup, cell setup. You might be aware that every strategy has its own weaknesses, right? Some setups work, some don't. That's very common. No wonder no one makes it 100% of the time. So, what if there are some things, some trivial, minute things that you can actually tweak in order for you to make that strategy a little bit better? Would you consider doing that? I'm sure you would. So, please stick around for the rest of this video. Make sure that you're subscribed, like the video, turn on that bell notification so that you don't get miss any of our videos that we post regularly. All right. So I want to talk about a QML, what I consider a perfect QML setup, right? The one that has got a higher probability of working. Okay. So yes, a QML setup, a QM strategy is actually very profitable, right? But you can also encounter some losses as well. You can encounter some stop hands. You can encounter some losses as well, and also massive wins as well. So I want to talk about the things that you can actually look for in that particular setup and make sure that those things are available, and if those things are there in a particular setup, it has a higher probability of working. Okay, I hope that's clear. So let's get started. All right, so you guys, by now you must be very much aware of what is what a basic QML must have. Okay, so this is the thing, right? So you have to make sure that your QM gives you a complete QM. The setup gives you a complete QM first. All right. So a complete QML setup contains of the QML itself, the low, and the higher high, the MPL, and the breakout structure right here. So you have to make sure that those things are there. Okay. So the one that has more preference is the one with dual resistance. Okay, the one that has more chances of working is this particular one, the one with dual resistance. So if you find a setup with double resistance, it has more chances of winning than the one with a single resistance right here. Because at this level here, meaning the retail traders thought of selling on the third touch here, and the market actually took them out. All right, so that adds more liquidity to the market. All right, so the one with a, uh, a dual resistance therefore makes that particular trade a higher probability trade. Okay, what else? Make sure that this high right here does not have levels where it's acting as resistance. I think we've talked about this several times now. So make sure that this high here does not have areas where it's acting as a resistance. I mean, in the past, make sure that you don't have touches here. You can put up a horizontal line on your chart and look to the left. Make sure, look to the left and make sure that it doesn't have contacts on this level. If it has, it's less likely to actually work out. Okay, that's out. The next one is make sure it has an MPL. All right, an MPL is maximum pen level. So this is where the manipulation takes place. The MPL is also called a mini QML, a mini QM, a mini Quasimodo. All right. So you have a high, a low, and a higher high, and then price will break that structure. So make sure that you have an MPL. Of course, not all trade setup will have an MPL. Okay, so make sure that you concentrate the ones with an MPL. QM alone does not really matter, because market usually doesn't even actually turn around from the QML. So where the market turns around, usually it's where the MPL is. So it can be at the top here, it can be at the QML exactly, or it can be below. So make sure you find that MPL. It's very important. Okay. And then also, as you can see, I've put a green line, a green and a red candle right here. So what I'm trying to say here, make sure that that particular candle that breaks this low here, all right, this particular candle that breaks this low, make sure that it's a big momentum candle that increases the chances of this particular trade actually working out. Why? Because when we have big candles like this breaking structures, it shows that there's presence of smart money in the market, and that's what we want. Okay, because they can't take all the trades at this particular level, market has to come back to this level so that they can take more of the unfilled orders. That's the reason why we have to look for setups with a big candle breaking this structure. And if you look to the left here, market had actually makes a support here. And at this particular support, this support causes market to actually bounce to go to the upside. And therefore, there's demand at this level. Therefore, if there's demand at this level and then market breaks this demand zone, it shows us that there's now a change of market direction, right? It tells us that this market is no longer an uptrend, but therefore it's a downtrend. So this gives us more confidence that this market has actually a higher probability of working than not. Okay, so that's on the QM. That's very important. All right, then we call this the past. Then the next thing is what we call the approach. So on the approach, I'm talking about this level right here. I'm talking about all this level right here. Okay, so what is important about this level? So the market will try to play all kind of tricks here. The market will play all kind of tricks here, and it's very important for you to be able to recognize those tricks and actually take advantage of them. Why? So you realize that the market would have formed a support here, then resistance, resistance, resistance. Okay, so you have to think of it in a holistic kind of manner. You have to put yourself in a smart money shoes. Okay, so when we have a lot of resistance, what this means to a retail trader is that there is a lot of actually high chances of market dropping when it comes to this level next time. Okay, but as smart money traders, we know that the more resistance there is, therefore there's a higher probability of actually that level being broken down. Okay, the market is going to break that level because there'll be a lot of liquidity above that level. So the market wants to take out that liquidity above that resistance, and then the market can drop. So we have to understand that the more resistance there is, the higher probability of what? Of the breakout. Just a fake breakout, of course, and then the market goes and collects the unfilled orders at the MPL and then drops. So we have to be very much aware of that. So here, what you can have what we call an SRR flip. This is where the market gives us a support, then a resistance, and then market actually goes through this level, comes to our QL, our MPL, and then drops. That's one. You can have what we call a fake out. Okay, a fake out V2 where you have resistance, resistance, and the third resistance market breaks through, goes to that level, our MPL, collects all the liquidity around this area where I'm saying where there's a cluster of stop losses. It takes out those stop losses. After that, the market drops. Okay, then you can also have a diamond fake out where the market gives you a fake QM like this. It gives you a fake QM where you have the QM here and the low and the high and the break of structure right here, and then this will cause head and shoulder pattern traders to actually want to sell at this level. And then the market will give you a little bit of confidence by going in your favorite bit, and then the market usually goes up, takes you out, and also takes out these people who are trying to sell at this level, and then the market drops. Okay, so that's a diamond, that's the SR flip, and the fake out. There's also what we call a CPLQ, where you have the market compressing, and then takes out the liquidity at this level, and the market drops. So, what do I want you to concentrate on? I would love you to concentrate on one particular setup. That is a fake out setup, right? Make sure you only right now focus on the one that gives you fake outs like this. Market gives you a fake out, it can be an SRR flip or just a fake out. The resistance, and the market. Make sure this void right here is filled. And this what happens here is usually that the market would actually push through this level with a massive candle, right? So this is to take out the liquidity around this area, and once the liquidity is out, the market usually drops. That's very, very common. And if you do that, you realize that there's a higher chance of your trades actually working out than not. The other thing is, yeah, basically here on your entry, please don't never take these trades randomly. Just because you know you have an MPL looks very good doesn't mean that that trade is going to actually work out. Always wait for your confirmation. I had the comment in the comment section, someone asked, what confirmation do you look for before taking a particular trade, before deciding to sell or buy? So it's very important for you to know your confirmation, right? So make sure that you actually understand your reversal patterns and your reversal candlestick, the reversal candles, right? So on the reversal candles, there are bullish reversal candles and bearish reversal candles, right? So you can talk about the bullish reversal candles. You can talk about a hammer. You can talk about a bullish engulfing pattern. You can talk about the double bottom. There are a lot, so you can look for those confirmation. Of course, you can go on the lower time frame, do what we call multiple time frame analysis. Try to go on the lower time frame and look for those reversal patterns. If you're looking at, you're looking to sell, go and look for the bearish reversal patterns on the lower time frame. Look for a shooting star, which we call a pin bar. You look for your evening star. Look for your bearish engulfing pattern. All those will tell you when it's the right time to actually sell. And then, of course, those things are supposed to be happening after the market has taken out the liquidity right here. So it's that important, guys. Make sure that you wait for your confirmation. Never take the trade randomly. Okay, so stop loss placement and take profit placement. Of course, stop loss, it would depend on what kind of setup you have at that particular time. Okay, for example, this particular one where we have an MPL, it's prudent for us to actually put the stop loss slightly above the MPL. However, if we don't have an MPL and this particular trade only has a massive candle dropping from the higher high right there, then it's safe for us to put your stop loss above the higher high. Okay, I hope that's clear. If the trade doesn't have an MPL, make sure you put your stop loss above the higher high. If the market gives you an MPL, put a stop loss above the MPL, at least 20 to 30 pips, depending on how conservative you are. People are different. So, make sure that you leave some space so that you avoid being taken out and the market continues to go in your favor. That's very, very bad. I think we had a lot of those trades last week, which is not good, I'm telling you. So make sure you leave some good space for the market to actually do whatever it wants to do before dropping, right? It's very bad for the market to take you out and then to go exactly in your direction. That's very bad. Take profit, of course, look for the next fresh demand zone. Okay, in our case, it will be somewhere around here. So make sure that you have a fresh demand zone that you're actually aiming. It's very important. The market won't always go direct in your favor. It may come up to this level right here and then continue to go down. To go up. And then your take profit was kind of actually below this level here. You'd have missed out. All right. So it's very, very bad like that. So make sure that you actually doing everything possible in your power to actually identify high probability setups that will actually help you in the long run. All right. The QML setup works, guys. The Quasimodo strategy works, and I've used it. And I want to show you some of the trades, some of the wins we had with the QM strategy. So I hope this is clear. I hope all this is clear. I really hope it's clear. If it's not, by all means, please comment in the comment section. If you're watching this for the first time, we've done a lot of videos. We've done a ton of videos about the QML setup, QML strategy, QML fakeout, QML diamond, CPLQ, a lot of those. All those are in the other videos. Please go watch those videos as well. Please make sure you subscribe. If you don't understand anything, please also leave that question in the comment section. I'll personally get back to you. All right. So let me just show you some of the wins that we've had with our strategy. Okay. So let me just show you right now. Let me just show you, I think, a few of them. Okay. So this was AUD New Zealand. The one thing about our strategy is that it works on any particular pair. It doesn't choose like, no, you don't have to just trade gold with it. You have to trade. Personally, I trade different type of assets. Okay, so it works on any pair or any commodity, anything. It works. So make sure that you just do your back testing and actually have proof for yourself as well that it works. So this is what happened here. We had a nice QML setup right here. I have to zoom out, of course. This is the picture, right? And it worked nicely. Okay, dropped. We had another one here. This was copper. This trade we took it last week, and it worked perfectly, giving us over 250 pips. Okay, this was copper, by the way. And then the other trade we took was this is the same copper. Then this was copper as well. Copper seems to actually respond nicely to the QML. Look at what I was telling you. So there's always this void here, and make sure that this void gets filled first. After this void was filled, market gave us a fake out there and another fake out here, and then it entered there, stop loss above the higher high. Look at this. This doesn't have the MPL, right? So your stop loss is going to be above the higher high. That's very, very important. Same here, look at this void, this fake out area, which we call the liquidity or the fake out zone. Make sure that this zone is what? Is taken out, and then you can enter right there. Okay, you can see this was a Euro card, worked out perfectly. QML, support, market broke on the support, and then it came to our level, and then we took the trade, and then pushed the upside like that. Look, this is the same Euro card, and it pushed very much to the upside. This was on the daily time frame. Of course, I mean on the 1 hour time frame. Remember, this setup, this strategy works on any time frame. It works on any particular pair. So you don't have to restrict yourself to actually trading one, or unless that's your style. Otherwise, you can actually trade any pair, any currency, or any commodity. Look at this. This was very, very beautiful. Beautiful trade, right? Very beautiful. Make sure you do your back testing. Check. Nice breakout of that falling wedge, and the market went to the upside like crazy. This was also Euro Swiss 30 minutes time frame, and it worked perfectly. Okay. This was another trade. This was Euro GBP. Nice particular trade, nice beautiful trade on the 30 minutes time frame. This was a Euro JPY, also nice SR flip. Price took out the liquidity around this level and dropped like that. Very nice. Also, this one market just started to drop. Very nice. After, of course, taking out the liquidity above this level here. Very, very important. This was Euro JPY as well. Buy, nice setup. Price dropped, and we took us in. The market went to the upside like crazy. This was on 2 hour time frame, by the way. So this particular one was Euro USD. Nice pair. SR flip there. Market took out the liquidity with a CPLQ, and market dropped. GBP AUD. Nice trade. Of course, always wait for this fake out zone to be taken out. Once the fake out zone is taken out, then you can enter the trade. And make sure that you have what? Your QML complete there. This was a GBP Swiss. Beautiful trade right there. Very beautiful. So, yeah, this is a GBP New Zealand, also responding very well to our setup. Very nice. This was gold. Beautiful trade right here. Very beautiful. Of course, after taking out the liquidity above this level, nice push with a big candle, then market dropped. Then the other one was US 30, beautiful trade. Okay, beautiful trade, and this was on the 30 minutes time frame. Another particular trade was USD Swiss. Yeah, very nice trade, guys, on the 4 hour time frame. After taking out the liquidity above that level and the market dropped. USD Swiss, same continuation. Yeah. So you guys, this was ES 30 as well on the 4 hour time frame. Very, very nice trades. So I hope you guys have demonstrated to you that I'm not just talking from without, I'm talking from experience. I've been using this strategy for a while now. This works. Okay. If I believe personally that I'm actually giving you the juice, I'm giving you everything for free. Okay? All this is for free for you guys. However, if you still don't understand what I'm trying to explain in these videos, okay, the links down in the description. uh Come and learn with us if you still don't understand this what I'm explaining right now. If you still don't understand, you still have difficulties actually comprehending what I'm trying to explain right now, the links down in the description. Get back to us via Telegram, WhatsApp, or Facebook. We will gladly help you. We will offer mentorship, we also offer signals. So we can come and join us. We can actually learn. I can actually teach you so that you actually became be able to trade on your own like that. Otherwise, thank you so much for watching. I hope this has been helpful. If it has, please subscribe, like the video, and also leave the comment in the comment section. Thank you so much for watching. Goodbye and God bless you.